Hi, this is Ben Poole for Finextra, and I'm joined by Penny Hembrow from CGI to talk about some of the major trends in banking. Thanks for joining me, Penny.
Thanks, Ben. I'm talking about the results of our strategic planning process, where we go out and we interview over 1,000 of our clients every year to talk to them about what are their key trends in the industry, what are their business implications of those key trends, what are the IT priorities, where do they see innovation coming from in their industry. And I'm particularly going to be talking about the 133 interviews that we did with banks this year, and they're split between retail banking, corporate and transaction banking, and capital markets.
So Penny, what are the big industry trends that the capital market players are talking about today?
Well, not surprisingly, it's still all about regulation and control. So they're talking, with all the fines that have gone on, all the press, when we talk to the business leaders, it's really all about making sure that control is really pushed in through the organisation all the way through. But then they're also talking about, where do we make money? So if we think that pre-crisis investment banks were making 17% return on equity, and in 2004, just using a bunch of the top investment banks worldwide, that's down to 9%. And what they're then saying is the regulation is going to take between another 3 and 7% off that. Clearly, what they're looking at is two dominating factors. Where can I make money? How do I make money? And how do I get my costs down in order to improve my return on equity?
And so what are the business and IT implications that people are reacting to from these trends?
Well, let's look at the revenue side. So we've already seen last year that there's been a significant focus into equity trading, asset management, and wealth management. So a real switch out of some of the riskier products, the structured products, into areas of the market where they feel that they can make significant return on equity at the cost of capital that they have. But what they're also saying with that is that in an algo trading world, they need very, very modern trading technology, and they need data that works at a sub-real time. Traders make money in under a second, so they need very fast, very efficient trading mechanisms. Then on the IT side, and this way it comes to the cost side, so what they're saying is no longer can we have stovepipe back offices. So it's really an IT and operations agenda. No longer can we have the stovepipe reconciliation and settlement, the middle office and the back offices that we used to have. We need to have much more streamlined, highly automated, highly straight through processes to support the bank in its trading operations. And in order to do that, we actually have to gear up with our suppliers to help us to do that. What they're also saying, because they've already done mainstream cost reduction, is we've got to look at the way that we run our IT and operations in a completely different way. So we've seen this year a significant trend towards open source, cloud, using suppliers, centres of excellence in order to manage and industrialise IT.
And so let's go into the future a bit, 2 or 3 years. How do you see digital transformation continuing to affect capital market players?
Well, I always think of 1986 in the UK when the stock exchange dematerialised. So the digital world has been around in capital markets for some time. So it's not so much about the digital technology world, it's really about the asset flows and how fast they flow around the world, and how can technology help that without disrupting the markets. And that's a very significant challenge. How they actually support that from an infrastructure point of view, it appears to be a widespread move out of bespoke, custom-built technology sitting in the back office in each individual bank to potentially shared technology platforms, certainly to standardised technology platforms, and certainly to a much lower cost structure than they have today.
Penny, thank you for joining me.
Thank you, Ben.